Yo, what's going on, party people? It is Rags to Riches here with another cryptocurrency market update and portfolio update for you. We got some crazy news going on into the market with XRP regulatory clarity, Bitcoin in a run for the hills, as well as some massive price appreciation for the portfolio. So on that note, let me get into the details, pull up my handy dandy Binance portfolio so you guys can see what's going on. As you can see, as of right now, the portfolio is up 3.9% for the week on a 24-hour, or actually no, 3.9% for the day. Made a clean $200 just for my altcoins here. As you guys know, I am a cryptocurrency miner, so every morning I get Ethereum Classic and Zilliqa deposited right into Binance to deposit onto exchange, diversify into alternative cryptocurrencies, and then get some outsized returns compared to the equity markets. Plot twist, the portfolio is actually up 4.22% as of the time of recording this here right now. So as of today, we got about 575 Polkadot, 3,400 Polygon, 92 rendered tokens, 19 Chainlink, 710 Fetch AI coins, 46 Filecoins, 1,800 the Graph tokens, 0.09 Ethereum. Those are rookie numbers. I got to get those pumped up a little bit further. 256 Kava and 8,902 V chains. Now, the portfolio's intent is to invest in these alternative assets for the purpose of proof of stake protocols to bolster my passive income. Each one of these asset classes I think are very fascinating. This is a layer 2 scaling solution, layer 0 interoperability solution, layer 2 scaling solution, decentralized cryptocurrency, GPU processing. Chainlink is a protocol that allows blockchains to interact with off-chain data. Fetch AI is AI built on top of blockchain. Filecoin is the crypto version of Google Drive. The Graph is the crypto version of Google. Ethereum is the layer 0 basically of Web3. Kava is decentralized finance running on the Ethereum and Cosmos blockchains. And then VeChain is supply chain management in action. But I want to go into prices here so you guys can see kind of what I've been talking about as far as these returns that we're getting here. So, going into my favorited tokens here on a daily price appreciation. Don't know why I have all these here, but let's see. Huh. Okay, there it is. Perfect. So Chainlink is on a tear. It's up 13.83% today. We got Fetch AI up 6.3%. Polygon up 5.45%. My Zilliqa mining rewards are looking a little bit healthier with a 5% gain just today. Polkadot is up 4%. VeChain is up 3.3. Filecoin is up 3.2. Render token is up 3.2. VTOR, which is the mining reward for staking, or I apologize, staking reward for staking the VeChain protocol, is also up considerably alongside the remainder of the portfolio here. Now, there's a few big catalysts as to why we're seeing these returns, and let's get into some of the news articles that I got for you today. First and foremost, we got some news in regards to the Ripple SEC lawsuit. Ripple executives cleared of SEC charges. Bitcoin and XRP surge in response, and not just Bitcoin and XRP, some of these other altcoins that we have here in the portfolio. Is that not an exponential chart that I'm showing you on the right side of the screen? But in a significant turn of events in the world of cryptocurrencies, the US SEC has decided to withdraw its claims against Ripple's CEO Brad Garlinghouse, executive chairman Chris Larsen. The SEC had accused him of aiding and abetting Ripple in violating federal securities laws through XRP transactions. Now, this decision announced recently marks a pivotal moment in the agency's long-running legal battle with Ripple. Notably, this turn of events has a profound impact on the cryptocurrency market, particularly in Bitcoin and XRP. Well, this article is, while speaking to what is happening, I don't think this has any direct impact on any assets beside for XRP. But from a sentiment perspective and from a regulatory perspective, that is where I begin to agree with them. Why is the SEC losing ground on this battle with XRP, the token that is supposed to help banks use blockchains to do cross-border transactions, beneficial for the cryptocurrency networks? One of the goals of the SEC is to provide regulatory clarity and financial disclosure and consumer protections for securities. one of the claims that the SEC has had heading into 2021, into 2022, and then many legal actions that have taken place this year is to try to denote cryptocurrencies as unregistered, unregulated securities rather than commodities, which many of them are. Now, I do think there is a case for some cryptocurrencies to be treated as securities, as it is essentially an underlying business that you're trying to seek profit off of the actions, behavior of others. But when you look at cryptocurrencies like Bitcoin, Litecoin, Ethereum Classic, these fall more directly into the line of commodities. Now, what is a commodity? A commodity is an asset that's price is determined by supply and demand. Its price is set by how much someone is willing to pay for it at the price that someone is willing to sell it at. Now, as the SEC continues to lose these legal battles, this is going to be very beneficial for cryptocurrency. Should cryptos be considered a commodity, they'll be regulated by not the SEC, but the CFTC, the Commodities and Futures Exchange Committee. And this committee is a lot more lighthearted and a little bit more regulatory friendly as far as financial products, services, and regulations go. Having that regulatory clarity and continued legal battles from the SEC ending in relation to cryptocurrency is certainly going to be a catalyst potentially for the industry. So I look forward to seeing how this progresses into the future. Godspeed to the XRP management team. Heading on to an article from Forbes, this is just not priced in a huge shift that's about to blow up the Bitcoin, Ethereum, XRP, and cryptocurrency market. Now, the Bitcoin price this week touched 30,000 per Bitcoin for the first time since August as Ethereum, XRP, and the crypto market braces for a $15.6 trillion earthquake. Now, this article is alluding to the potential asset allocation, the amount of money to be invested into the spot ETFs that companies like BlackRock, ARK Invest, and many others are trying to get pushed across into the finish line and available for retail investors to purchase into. Now, when they say $15.6 trillion, this is the expected amount of money that would flow into these assets from not only retail investors, but large banks like JP Morgan, Morgan Stanley, Bank of America, etc., alongside pension funds, hedge funds, and private equity. Many of these institutional investors, the ones that we need to see truly massive price appreciation beyond what we've seen so far from merely the whims of retail investors and a few high net worth individuals in the space, is going to require institutional levels of capital, and institutions are not and will not invest into these assets until they have certainty they can do so into perpetuity with clear regulatory guidance. Now, heading a little bit deeper into the article, a Bitcoin spot ETF is going to be approved. We think it's going to happen in 2023, called or cited by Mike Novogratz, crypto investor and chief executive officer at Galaxy Investment Partners. He told that to CNBC. Galaxy Investment Partners, in partnership with Invesco, actually has its own spot ETF lodged with the SEC, but their decision on the filing has been delayed in September by the SEC as they're trying to get some more ground in the fight against the industry. Ultimately, I do think the SEC does lose this battle. Bitcoin in particular is a commodity. If you're willing to get comfortable around approving a futures ETF, what possible rationale and logic do you have with people not investing into the underlying asset via an ETF structure so it can be properly custodied by a large institution is beyond me. We need regulatory approval. The tides are turning against the SEC. It is my bull case that it will be approved at some point into the future, potentially not in 2023, but certainly in 2024, at least in my estimation. Now I'm looking forward to us actually getting some regulatory clarity on this matter. Heading into an article from Mint, cryptocurrency Bitcoin just surged above $30,000. So this is a very important price point for the Bitcoin network. And I'm actually going to pull up an example. I was looking up some details about the housing market. Just bear with me here. I'm actually going to pull up the Bitcoin chart for us to actually go through this in some more detail here. So just bear with me. BTC. And I do this on Yahoo Finance when I just got to look at a graph real. Actually, let's just use Google because that'll be simple, right? Let's use Google. Now, going into a 5-year chart of Bitcoin, $30,000 is a very important price point for Bitcoin because this is where we initially found some legs after the initial sell-off from the recent all-time high I've called about $69,000. We had retested this a few times into the past, and if we can see sustained and continued price appreciation above this point, continued positive movement upward, it is likely that another bull run, not a true bull market like the one that we saw from 2020 to 2021, but potentially something like we've seen in the period after the 2018 bull run, from, what is this here, 6,000 to 10,000, 3,000 to 10,000 is definitely something that could be on the cards for the underlying asset class, especially with the catalyst coming in from the spot ETF potential approval. Now, this is a common claim from institutional investors and those not as well versed with the space. Many people think that cryptocurrency is too volatile for it to be a part of your retirement plan. People like to think that standardized returns of 7 to 10% when the average wage is not increasing faster than inflation is actually going to be sufficient for people to have a long and healthy retirement once they stop working. In my perspective, and this is actually agreed by the CFA Institute, there may be a place and a role for cryptocurrency within the role of the portfolio. But let's get into some of the details from this article. Got some backdrop on FTX, talking on the volatility of the underlying cryptocurrency networks, and let me at least give you my high-level perspective on this, right? Now, cryptocurrency is an asset class, given that it is underinvested, misunderstood, and underutilized by the institutional investment community, has the potential for massive price appreciation. However, for this to take place, we need regulatory clarity and for these institutions to invest into those assets. These institutions, unlike retail investors who are very easy to shake out of the market to have them sell due to, say, a 2 or 3% decline after they purchase in, not knowing what technical analysis is an issue. But institutional investors have some diamond hands, as opposed to, say, yourself and I. Well, I have diamond hands because I am a short squeezer, was involved in the GameStop saga. My point there is that there is a role for cryptocurrency. I'm actually going to pull up a note from the CFA Institute here. Bitcoin CFA returns 24% increase. There it is. Yep. But on this point, the CFA has actually done a lot of research into this. A Research Institute report looked at the impact of having Bitcoin on a diversified portfolio between January of 2014 and September of 2020. Over this period, a quarterly rebalance of a mere 2.5 allocation to Bitcoin improved overall returns from a traditional 60-40 portfolio nearly by 24%. This is a massive impact from such a tiny allocation into a portfolio. We're talking about price appreciation for the underlying asset over the period of 2014 to 2020 of over 2,800%. That's 28 times, people. Why is that? Because Bitcoin is deflationary. There's a fixed supply. There is true underlying value within the network. It is a true store of value, just like you would have within gold in your portfolio. Now, should cryptocurrency make up 50-60% of its portfolio like it is in, say, some people's, or a larger percentage in mine? Probably that may not be the case for you if you're not willing to get comfortable around levels of volatility in the lines of that of cryptocurrency. However, for those that are looking for outsized returns, diversification through an alternative asset class, who don't have access to things like hedge funds and private equity, I do think that cryptocurrency is something to consider as you continue to build out your net worth. But on that note, people, I am going to go chill out for a little bit. Going to be making some videos and articles for the blog later today. Please continue to have some diamond hands. Let's be hyped for the price appreciation we're seeing into the market today. Do not fall for the rug pulls. Make sure you're investing in high quality assets, and be sure to remember, this is not investment advice. This is just my perspective for education and entertainment purposes. But please continue to work hard, and let's turn our rags into riches. Bye now.